In this video, I'm going to walk through testing the real-time nature of a trade system that you have developed. So one of the important things when you're creating a trade system that gives you an edge in the market is that sure, you can go back in a chart and you can look at it and you can see whether or not that trade system works. You can backtest it. You can even visually backtest it. But one of the things that is important is doing it in real time, is trying to simulate what it would look like in real time, because it's real easy to go back in a chart. And if we just look at this chart right here and say, let's just say I create an entry signal. So we're looking at GRS BTC on the 2-hour time frame. And let's say that I see 1, 2, 3, 4, 5, 6, 7 2-hour drops. And that's my entry signal, and it broke support, which this would be a good kind of breaking support, buying the dip and everything else. This would be a good trade here. Maybe that's my setup signal. And what I say is I'm going to enter here, and it's real easy here in historical nature to say this is an awesome entry. This is a great place to enter the trade. The challenge is in real time and making those decisions when the right side of the chart has not revealed itself is really hard. So I'll walk through how to do that in an exercise. And what we're going to do here is we're actually going to just set up a trade system. So I'm not going to go into detail about much of how you would maybe look at this trade system. I'm going to throw a couple indicators on here, and I'll talk about how you would look at these indicators. So this video will be a little bit advanced, I'd say, but we're just going to jump in. So let's first, I want to go to EOS, so I don't want to do this on this this instrument here. So we'll go to EOS, BTC, and Binance, and we'll start on the daily time frame. And what we're going to do is we're going to start adding some indicators here. So I'll add 3 EMAs. So we'll go to indicator, and we'll do EMA, and we'll add 3 of them there, and I will change them here. The other thing I want to add is the RSI. And we will add just the standard RSI. Typically, I'd use the Connors RSI, but we use the standard RSI. Now, what I'm going to do is I'm going to change the RSI here, and we're going to update the time frame. We're going to change this to 4. I don't know why people keep it at 14. You really should figure out what works best for you. We're going to change this to 90, and then we're going to change this to 15. All right, maybe 10. Now we'll keep it at 15. All right. So we changed the RSI, we changed that. Now let's update our moving averages. We're going to create a slow moving average. We're going to make this, let's say, the 200. We'll go for longer trends, and we'll make that a red line. I like to make my moving averages lines a little bit bigger so I can see them. And now we'll make this one the 50. We'll keep it blue. Go to input and make it a 50. And now we want a fast one for crossovers. So we could say 9, and let's actually stick with 10. So let's do 10. And we'll make this one a different color. We'll make this an orange, and we'll make it bigger. All right. Typically, I make my fasters, I make them green, and then I make my slowers red. Basically, if you can think about it, red means stop. It's really not the best way to look at it, because typically if something's trading above a 200 moving average, and it's staying above that and other moving averages are up there, you're typically in an uptrend. But that's what I typically do. One thing I will suggest is if you use moving averages, which you should choose the same color across all your charts. That way you can tell at a glance, even subconsciously, what you're looking at. All right, now the one other thing I'll add here that I think would be interesting is the rate of change. So let's add rate of change, and we'll add this here. There should be rate of change bars. So let's see the rate of change bars. So this is the rate of change, and it's in a graph, but there's actually one here that is, I find, more helpful. And we'll say rate, and let's see it, BAR. I have to see if I can find it. Let me pause the video. All right, so the other indicator I'll add here is it's called the percent change bar. And so percent change, and I'll go through the trade system here as we walk through it, and I walk through the exercise. So I'm going to add these, but we'll go through this. So we'll go percent change bar. You can do the per candle. You can also do this one here, number 3. And I like this because what you can do is you can change the baseline. So what this basically shows you is just the amount of change per bar. And what we're going to do is this is going to be a retracement strategy. And what we're going to do is we're going to put -6 here on the level. Now what that's going to do, if we remove this line, so you'll see that's the baseline. If we go here and we go -6, you'll see that that moves the baseline down to -6, and we can see the bars that have had more than 6% decline, or this would be the daily bar. So a day that has had more than 6% decline. You can also see a trend. Obviously, you can see this on the actual chart itself, but this really gives you an indication of what that true number is, what that true percentage decline is. So we'll do okay. All right, so now we're good. Now, typically, if you've watched my videos and even if you're in my training, you know that I would have value channels on here. So for completeness, I will add value channels, but I won't talk about them much, just because what we'll do is the problem is that I wouldn't trade without them. So I do trade naked charts, but I even trade naked charts with just value channels. I consider those naked charts. So I put a value channel on there, and that's what we'll trade off of. So let's say what we're going to do with our trade system. So let me hide this here. Let's remove this rate of change. With our trade system, here's what we're going to devise. Let's say that we've noticed in the market that, and let's go to the 4-hour time frame. So this is going to be a 4-hour time frame, and we'll do a 4-hour time frame. We could choose a 1-hour time frame as well. But let's say this is a 4-hour time frame. We're going to do swing trades. And we noticed in the market, by looking at charts and looking at things, is that when the actual price line hits this rate of change here, and maybe we might have to change this now that I look at this, but if we move the rate of change up to, let's move this here, and this is part of creating a trade system, or a system for you to actually do this in real time. Let's say 4%. Let's see if that catches that. Yeah, so perfect. So we'll say 4.5%. All right. So what I did is I made the baseline 4.5%. So our trade system that we're developing here, that we want to test out and see how it works in real time, even though we know the results of it, we want to see how we would react in real time, and how good this trade system does at giving us signals, and we want to mimic real time as much as we can. So with this trade system, what we're going to do is we're going to say our signal is a clear downtrend, so it's below moving averages. So we see this here. So it's below moving averages. So there's our 200, our 50, and our 10. And we're going to look for the RSI to be at the lower end here, below the 15 here. So it's going to cross below the 15. And one of our entry signals is going to be below our baseline. Price is going to hit below our baseline. So we're going to be retracement buyers. That's the strategy that we're actually looking to actually employ. And our first entry is going to be when those signals get close so they align. Now, most people, when they're creating a trade system like this, they would want the RSI and this to be aligned, and there's so much more to it than that. Beyond just saying that I want these things to align, there's also divergence and everything else I won't get into, but basically let's just make this simple. The simple is that it's below 15, it's below our baseline, and the moving average is starting to trail up. That's what we're looking for. Or there's rejection to the downside. So if we turn on our value channel, we do see that this is a value channel area right here, and it's got rejected. So there's also an entry signal here on a value channel as well. So this is another good sign. So here's how you would test this system in real time. And I'll do this a couple times. I'll walk through this. Is that typically you're not going to maybe enter on your 4-hour time frame. That's going to be one of the time frames that you'll look at. But typically what you're going to do is you're going to enter either on the 2-hour or the 1-hour. That's typically what you're going to do. But you might start at the 4-hour time frame because that's the time frame that you want to trade off of. This is a longer swing. We're talking 2 to 5 days. So as we go here, what you want to do, and this is going to be hard to see, but one thing that's always helpful to do is move the chart to the right here where you can't see it. And you can't see that bar. It's really hard, I know, in the video to see. And if I hide the sell panel here, the buy and sell panel here. So what you want to do, and this is where the reality really comes into play. We're looking at 4-hour time frames. Keep that in mind. So we're looking at 4-hour time frames. And if you move to the right of the chart, the hard right edge, and you don't reveal price, you already know how it's going to work out. You know that there's a trade signal about to come up. You've already back tested this and said this is a good signal for entry. You've already created your exits and everything else. As we look at this here, and we go, just all you want to do is hit the right arrow and just watch price unfold. You're watching your indicator, you're watching your moving averages, you're watching what it looks like. Keep in mind, this has already been 8 hours. Here's another 4 hours. So we don't have a signal yet. We have to be patient. But our RSI is showing a signal. So this is telling us to be a little bit ready. Now, this is where I'm walking through this in the intentional way that you would do this, because it's so easy to look back in a chart and create this system and back test it and say, yeah, it works. And where people break down a lot is in real time, is that they develop a system and then in real time, they don't trade that system with conviction, because looking at this data in real time is much different than looking at it historically. It's drastically different. Your emotions are different. The way you're looking at the market is different. You're in, some people have not got over the fact that they might have a missing out mode. You might be in an emotion where you're fearing missing the trade. And you shouldn't fear missing the trade. You should just focus on doing good trades on a system that you've developed that gives you an edge that you can trade with conviction. So as we go through here, we see that, well, the RSI is still giving us a signal, but we don't have a signal on our baseline. So we're not trading yet. Well, we're getting closer. That's a pretty big drop. So this is another big drop. The RSI is continuing down. We are probably happy that we've been patient. It's continuing to drop. Now we're starting to see some rejection. Now let me scroll in here. There, we'll make it a little bit bigger. So that way you can see it. I should have done that to begin with, so I apologize. So if we go here, you'll see now this is where a lot of people, if you develop the trade system, you might have, this is also where you might say, I need to refine my trade system. Because you walk through this, remember this is real time, you walk through this and say, well, okay, well, that's what I'm seeing in real time. But as we see, it's good that we stuck to our trade system. Just a minor retracement. Now, it's maybe entering a consolidation phase, but it's continuing down. It's still in a downtrend. Now, it did bounce off the moving average, the 10 here, and the 4-hour here. We see the RSI ticking up. We see maybe a consolidation phase. And you just walk through this hour by hour. Keep in mind, this is why trading, one of the reasons why trading is hard. We would have had to have been extremely patient for 3 days, 8 hours. No trade on this instrument for 3 days, 8 hours. It hasn't hit our trade signal. It's not even near our trade signal. So, but we might be seeing a consolidation. And this is where a lot of people would maybe jump on and say, I'm going to trade the breakout now. I'm going to be a breakout trader. Because what do we design here? We designed a retracement trade. But we see it moving here in 4 hours, and now we have a fear of missing out. That's where a lot of people make mistakes. This is why when you develop a trade system, you want to go through an exercise like this. Walk through it in real time. Walk through what it would look like, what it would feel like. Put yourself in the mind of what you are like when you're watching the market in real time, when you're trading real time. And you'll realize that you can design a great trade system that looks awesome in retrospect. But in real time, even in this mimic real time, it's hard to trade. It's a lot harder than just here's my rules, because this is patience. We'll see what happens here. We have a retracement. Once again, we feel like we're missing the trade, and it's scaling back, scaling back. Now, you might walk through this exercise like we are here and actually come up with another additional trade. You can have a trade system like we developed here and say, okay, that's interesting. So you might change it here. And if we go back and say, well, that's pretty interesting. Now, the one thing I'm not doing is I'm not looking at other time frames. I'm not looking at the daily. I'm not looking at anything else. We're just looking at the 4 hour. So you would be doing that. That's what I suggest. But you might say, well, here's my new trade system, and I'm going to do a risk management one because this doesn't quite fit the rule. But when I see a decline, like I do here, of a series of red bars, basically a series of red declines that have strong volume, so there's some interest on both sides. It's just not sell interest. It's some interest on both sides. And the RSI is really low. It's at 1 point. It's around 2.4. That's a signal for me to do a lower risk trade, meaning what you would do is you would reduce your position size, but you want to participate in the market. So let's do a long position there. And we'll say that this is our mini scalp. So a long position there, and we'll just say that this is a 8% trade. We will do a 2% stop loss, 3% stop loss. I'm just making this up now on the fly, but let's say that this is our entry signal. So we see now what we would typically want is a confirmation. So we would say that this is our entry signal. It hit it hit below 3. So now we want some form of confirmation. This is where typically you're going to a lower time frame. I don't want to mess up the core concept of what we're talking about in this video, but typically you would go to a lower time frame. But what you would then do is you would model out this trade. And you would say, okay, I'm going to wait for confirmation. So this is for me to pay attention, wait for confirmation. And confirmation is the first rejection candle that I see on the 4 hour. Maybe that's your confirmation. Okay. So now we enter on the rejection. So we enter on the close. If the next candle looks like it's going green, and it did, so we're already up within our stop loss. Now we're still up. We're still up. Almost hit our stop loss. It's still within range, still within range, still within range. It's getting close to our stop, starting to move. And here it retraced down, starting to move. You notice we haven't, as we scroll through here, we haven't got any other of our trade signals either. So the RSI is in the middle, and the rate of change is not near our baseline. So but the moving averages are starting to get a little bit closer together. This one's starting to tick up a little bit, and it's starting to maybe try to trade above the 10 moving average. Exponential moving average. We're still in this trade. This is a long time to be in this trade, by the way, for not much profit. Still in this trade, and we might get stopped out, and we would have got stopped out. So we can see here that trade signal didn't work out that time. Doesn't mean that it's not a good trade system, just means it didn't work out that time. You're going to find that. You do want to understand the probabilities of how often your trade system works. And we didn't go into that. But this is, I'm going through this quick because you can see as we go through this, you can feel the real-time nature of the trade, of watching the chart, of what it would feel like. And you're simulating that. And that's what you want to do when you create a trade system like this. So let's move to where we see our first signal. So let's go here, and we're getting close. So here, we're getting close to our signal. We're getting real close. And let's just continue. Getting close again. I'll just keep continuing. I didn't think I went back that far. Obviously, I did. There we are. So this probably would have been, we probably want to adjust this up. just because we're missing some trades that I think would have been opportunities. So this is a prime example. These bars here. So let's move this up. Let's move our rate of change up. Instead of 4.5, let's make it 4. Let's see if that hits it. So great. All right. So this might be one way that you would do this. And this is how this would be a good example. And I hope this is making sense and I'm not just jumping through this very quickly. But our trade system now is our RSI is below the bottom line here, the bottom range here. The rate of change has to be below 4%, so a negative 4% or above, or touching this rate of change baseline. And we'd like to see our moving average moving up, our fast moving average. I'll talk about crosses and everything else. Our first position is going to be a small position we're testing the market, and then we'll add to the position as we get confirmations. So let's trade this out. So this is what it would be in real time. All right, so we hit our first entry. Now, typically you don't want to enter right when you hit an entry, but we have two signals here that are aligning. We have our RSI aligning. Our moving average EMA is still moving down. It hasn't trailed up at all, but it could change in 1 or 2 bars. And let's see what happens in the next. So we do see a slowdown in price action. And the next one, we see an additional kind of indecision in the market. And we see the next one. This is where we'd say we're good that we were patient. Now we would probably say, okay, well, it's at the bottom range here. We see 2 hits of our baseline down at the bottom. We're going to enter our first position. And this is going to be a smaller position. So your first position on something like this, because you don't quite have confirmation if the turnaround is there, smaller position. So if you're typically trading whatever you're typically trading as a position size, you would reduce that on this position. If you're right, you can add to it. That's the great thing about it. And here I wouldn't trade with a stop on something like this, but let's just say, meaning that I wouldn't put a stop in a system, but I would get out of the trade if it was 5 to 6 or 7% against me, and it just didn't look like it was going to turn around. So we're in this trade now, and so far we're looking good. And we see the moving average is starting to creep up. Our next entry now is on a cross of the fast EMA. So our 10 EMA is crossing our 50. That's the next entry that we're looking for. And ideally, we'd like to see price above the 10 EMA, but it's not necessary. It could just cross. So we'll see here as we unfold in real time. Hopefully you see, now we see that the price closed, jumped above the 50 and the 10. And we might see a cross here. So this is where, once again, typically you're not going to enter right here because it just broke out. Now you don't always get an opportunity to enter on a breakout. So this is where you might want to change your rules. Maybe you do an additional position, but I would typically be patient, maybe wait for a retracement. And we never got it. So that's where you definitely want to say, okay, well, this is where you amend your trade system. You say, well, if from this move, it jumps 8% in one bar, in one 4-hour time period, and it's above a resistance range, then, and the moving average looks like it's going to cross, then I would add a position. So you would add an additional position here. And I know I'm not explaining every little thing. I'm intentionally just talking at a high level. Now we've seen a cross here. See the 10 and the 50 is crossing. It's a good sign. Price is starting to trade above that. Well, we've got our cross. We've got our confirmation. But we see a retracement. It hit the 200 and it's bouncing off that. So this is where typically we'd want to wait for confirmation. We want to see, is it going to pull back? And typically price pulls back to the mean. So it pulls back to this range typically. And it likes to retest that and then maybe bounce off that. So let's see if it will do that if we get that opportunity. But we have our entry signal. Now some people will enter right here, an additional position. Remember, we already entered based on this 8 bar, and I would typically want to stagger my positions. If you put another position right here, then you really aren't staggering your positions, you're adding more risk. Now, the one thing here is that you're always looking for confirmation. And remember, we're doing this as an exercise of real time. Do I stay in this trade? Your trade decisions are binary. So, do I stay in this trade below? Yes. Do I stay in this trade here? Yes. Will it retrace and possibly retrace below my entry? Yes, it might. Maybe I entered a little too early. But the bottom line on a lot of this stuff is waiting to say when is it clear to me that this trade did not go in my favor and I need to get out of this trade. This is where you should be looking, and this is what this part of this exercise is. Now we're in 2 trades following our trade system. We got another confirmation here though. This is another confirmation of a 4%. So that's another confirmation. This is where you want to think about this. And this is why it helps in real time to do this, because just looking at a chart, you're not walking through the steps of what this looks like in real time. But as you're walking through this in real time, you say, okay, well, if I get a signal that would typically be a retracement entry based on a series of 8%, 10% moves, what should I have been patient and actually traded the retracement and not traded the breakout? Not trade the crossover? Or if it actually starts crossing over again on the moving averages, do I get out? So this is where it helps. So we see this is actually a good sign so far. The price is still engulfed within this candle, and volume looks pretty strong as far as both the sellers. So there's definitely buyers participating in both these moves, and we do see it actually turn around and creating a new, you could say, if you did draw just a rudimentary support line, support area, this whole area is support. It's finding resistance. It's finding support at previous resistance. So we can see that so far. So now this is where you make the assessment and say, okay, well, we're really deviating from the cross. One of these retracements, maybe I add to an additional position because I'm getting more confidence that this range is going to hold up, that this is hitting a consolidation range, and maybe that was your entry right there. As soon as it crosses the 200, and it looks like the 10 is going to cross, so my fast EMA is going to cross my slower EMA, which is the 200. As soon as it looks like it's going to cross that, and then obviously the 50 crossing it, this is a sign to do my next entry. So you do your next entry. Let's say you'd enter on this bar here. Typically, like I said, once again, for completeness, you're looking at lower time frames. But let's just say you entered here. Now, I'm not going to talk about exiting the trade or exits. I should, but we're just talking about walking through this. But what you would do, part of this trade system, is that your trade system should have an entry or an exit. It should be focused on what is your exit signals and how you going to define an exit. One thing we didn't do here is how far is it going to move. I'm not bringing in Bitcoin price or anything else. So those are things that you need to keep in mind as well. I'm just saying, I'm specifically focusing on this exercise of how helpful it is to do this walkthrough in real time, because it mimics what you see in real time. We see here, the one thing it doesn't mimic, obviously, is watching the candle unfold. That's the one thing it doesn't mimic. So it does mimic closed candles, but it doesn't mimic the real-time price action. So that's one thing just to keep in mind. Now, as we go here, we're looking for, we have a cross here. You see the cross? The 10 crossed the 200. That's a good sign. It's trading above the 200. It's trading above the 50. These are all good signs. We just want to see every retracement basically be picked up by buyers. That's what we want to see for strength. And we're seeing that every retracement is basically being picked up by buyers. So the support is holding. See a break? We want to see a break of support like this to hold up. Now we're trading below some moving averages, all of our moving averages now, this might have been a sign to get out of some of these trades. And we see here, just being a little bit patient, we see that it's back up and it's continuing up. So I won't, this really is the core concept of what you really should do when you develop a trade system, is something like this. Is that, because it gets a little bit harder now that we're in profit. Let's see where we're at here. On our first position, we are up. That's a really good range, 71%. So that's good on our first position. On our second position, we're up 36%. And on this position, let's just say it was around here, we're up 21%. So at this point, I'd be looking at the daily, I'd be looking at other things, and I would be looking at taking some profit. Just because it in crypto, when things move this much, they do retrace. And we are hitting the top of another value channel here. So I'd be looking for signs that I should probably maybe take some profit. Maybe let some of it play out, take half my profit, leave half in a trailing stop. So basically what I would do is probably take all of my positions and move them here at this, below this line here, with a trailing stop right at this line. So as price moved up, the trailing stop would move, and then maybe ride more of it out. And we see that it's starting to maybe decline. It's still messing around with these moving averages. But see, that's a long time. Once again, you're still in this trade, and well, it's still moving. So it actually was maybe helpful to stay in this trade. So this is where it was an additional 7 days. An additional 7 days got you 27%. So that's a good, I don't know why the RSI jumped up there, but that's a good actual, you could say that's a good wait of 7 days, I would say 30%. You might even say that there might be another signal here, because I don't think we added here, but there was another signal right here, potentially, of a pullback, but it was a pullback. The problem is that's a risky trade, because we're right here. If we look at this, this is where you look at this stuff. Right here, we see a decline below our baseline, which would have been our retracement entry. But it's moving, and moved through all the moving averages, and it's now, it closed below the moving average. Typically, this would be a sign to close the trade. Typically, this would be a sign, just because the probability is that it's moving down. That's the probability, because it's no longer in an uptrend. Now that could turn, so you could just be patient. So part of it is with trading, it's just being patient. And that's, let's say if we were patient, okay, well, it's still in the same range. It's trading in a range. All right, it closed up. All right, it's trying, but it's getting some rejection. All right, good. It moved above the moving averages. Great. It was good. We were patient. But it did get rejected to the upside. All right, now we're back above the moving averages. Okay, great. Good thing I was patient. You might have took some profits there, though. I would have took some profits off the table, just because if it did decline maybe in an 8 or 10% day, you'd like to take some of those profits. Here, it's still messing around with the moving averages, but it's starting to move up. But hopefully you can see by just walking through these exercises how it changes the dynamic of creating a trade system. How it really gives you the ability to mimic what you would see almost in the real market, and test your theory of a trade system in real time and walk through it. And you can walk through it on different time frames. One thing you can do is real easy, is you just you add additional charts here. So I add 2 charts. And this one here, instead of this, it's the 1 hour. And then what you want to do here is make sure it says time. So so whenever you move in a chart, like here, back when we did our entry, it moves it in time here. If we click auto, so this one here is the 1 hour time frame, and this one here is the 240. Obviously you can change the time frames, but it's just easier if you have a big enough monitor and screens to do this, where you can have multiple time frames, so then you're getting confirmation on these lower time frames. So that's where maybe you are looking, and maybe this baseline here, because you can change this baseline here on the 1 hour. You don't have to make this -4. You can make it -2, because you're basically saying this is a 1 hour time frame. So you're splitting up the 4 hour time frame obviously in 4s, but you still want to see kind of the same type of entry signal for a confirmation. Maybe you want to see 2 of these in a row on the 1 hour in conjunction with the 4 hour. So this is where you get more sophisticated with it, but as you get more sophisticated with it, you can walk through it the same way. I can go through here, and I can go back to my entry signal here. You can see it moved with time there, and we can watch it unfold in both time frames. I don't know why it did that. So here, we move this up. Now we can watch it unfold in both time frames. So you can see, okay, well this is what it would look like on the 1 hour time frame. Here's what it's going to look like in that. Now the one thing is you'd probably want to move it on the 1 hour, because the 4 hour is going to move faster. So what you do is you move it on the 4 hour, and you see here as I move it, it's moving the price action. So this just gives you, once again, it gives you a real-time model of what this looks like and what this feels like. Oftentimes what you'll find is that when you create a trade system that looks like you're a genius, when you go to try to replicate it in the real-time market or even in this simulation, it is harder to trade because the real-time market has noise, and the real-time market doesn't reveal anything to the right of the chart. So a lot of these crossovers are fake. Sometimes they're fake crossovers. A lot of these changes that we see here in the chart are fake. The RSI isn't always 100% accurate as a signal for an entry signal. So those are just things to keep in mind. But I wanted to share this video because I find this exercise when I'm creating a new trade system, and yes, I can back test it and put it into TradingView and do a strategy tester, and that works pretty well. But it's a lot different going back compared to do it in real time, to trying to simulate the real-time nature of the market without having to wait this next week. See, I don't have to wait this next week to do this. I don't have to maybe paper trade. I wouldn't paper trade. What I would do is I would just really reduce my position trade. So when I create a new trade system, I drastically reduce my position and trade it, and trade those signals. And that's what I trade. And then I look at that just because it's more real than paper trading. But you could go through the next week and just paper trade this system. This allows you to do that and duplicate as much as possible the real-time nature of the market. So I wanted to walk through this. Down below you'll see and any questions, any feedback on this video, definitely share. You want to subscribe here on YouTube. Down below you'll see links to tools that I use. Join me in the Discord group. Definitely you can ask questions there as well. And I look forward to seeing you in the next video.